What's going on, traders? This is Andrew O'Connell with Pristine Capital. Welcome to another market recap video. It is April 19th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to talk about the price action in the headline indices. We'll go under the hood and check out our sectors and style factors as we always do. We'll talk about some of my trades for the day, and then we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in here. And you can see today was a very interesting day. So, I've been talking about how one of my risk indicators went off last week, and we might get this blow-off scenario into OPEX. Now, we did get the blow-off, where it was like, oh my gosh, we've just been riding this 5-day EMA, up to the moon, essentially. Today, it was like essentially the first day of our little gamma hangover that we got after options expiration. Wasn't really too bad of a day, though. We ended up closing down 0.47% on the S&P 500. You can see on the NASDAQ QQQ, we finished down 0.92%. On our IWM small caps, we finished down 1.3%. And then on our Dow Jones, we finished down 0.32%. But yeah, you can see throughout the day, we were just kind of grinding lower. We ended up piercing through that 5-day exponential moving average. But we closed well above it, and we closed well off of the lows. Looking at this hourly chart, you can see here, this is the top of our weekly value area, where about 70% of the transactions in the prior week occurred. You can see, we dipped into that weekly value area at around, early lunchtime, but then we ended up getting a bounce out of it. So this was kind of a cliffhanger because it's like, all right, dip buyers came in, which is a good thing if you're bullish on the market. We ended up going into the close strong, but really we are just, back at this 5-day exponential moving average on this hourly chart here. And what we have to see throughout the rest of the week is, did we just kick off a little mini downtrend here, or was this just a little bump in the road? So that is to be determined. Now, if we take a look at our NASDAQ futures, this is the hourly chart again. You can see fell into this weekly value area. Then you can see we had a rally into the close, but we're below this weekly point of control. Last week, I couldn't even reference really any reference points on the hourly chart or the daily, just because we were so, beyond stretched to the upside. If you look at the Qs, same story here where we closed off of the lows, but it's kind of interesting that, with how bunched up this price action is here, you could potentially have, what we had here, which is one red candle that, you can wipe out multiple days of price action. So yeah, NQ down 0.97%, not the end of the world though. And then you can see the Russell here. We'll look at our RTY futures. The Russell just keeps battling at this monthly point of control here at around 2,220. So you can see we've had multiple tests of that level, and we've dipped below it many times. Every time we do, there are dip buyers that come in and immediately, pick up some shares of the small caps. So we will have to see. Today was Monday. Monday, for the most part, has been one of the strongest days of the week throughout 2021. And really 2020 as well. So if you have a weak Monday, that's kind of like getting off to a weird start. But we'll have to see. In the Russell, we really are just consolidating sideways. You can see we made a lower high, and we'll have to see if this ends up corresponding with, a lower low or really what happens. But you can see here, this is our weekly value area for the Russell, and you can see we dipped below that weekly value area, and then we pushed back inside of it. And then on our Dow Jones here, we'll pull up our YM futures. You can see down 0.25%. This is actually above the weekly value area. And if we look at the monthly value area, above as well. Now let's take a look. We'll go under the hood here. One thing that's very clear is over the past couple of weeks, there has been a flight to quality in the market. And by that, what I mean is, if you've been invested 100%, somebody had a really good tweet today, and they were like, I'm diversified between crypto, SPACs, like pre-revenue, high growth names, and blah, blah, blah. Like, why is my portfolio red? And it really is, like, throughout the past couple weeks especially, we've had this rotation out of a lot of the more speculative areas of the market and a lot of money moving into mega caps. A lot of mega caps with steady cash flows, dividends, things of that nature. So you can see here for our price action today, S&P 500 breadth overall was negative. But you can see there were a couple of these mega caps that were trying to hang on. Like we had Netflix, Apple, and Google that were kind of holding things up. But then a lot of other red areas of the market. Like you can see Tesla was down 3.4%. Did not close on the lows. They actually had some news that one of their cars, crashed over the weekend. I think it killed 2 people. But yeah, the semis in particular were very weak. So for me, I ended up putting a position on in applied materials. But if we don't have strength in the semis, which I have a feeling we're going to get a bounce in the semis tomorrow. But I'll pull up the SMH ETF. SMH, these semis pulled us out of the abyss when we were in, this really choppy period in February and March. So it would really surprise me if we keep rallying to the upside and the semis just don't participate. But you can see, it looked like, oh my gosh, they really plunged into the abyss, but they were, bought into the close, and you can see closing right around that 20-day moving average. But what it's starting to look like is, the good old days. In the good old days, we had this sort of like very slow moving, like zombie market where it was literally just the FANG names that were pretty much propping the whole thing up. And it was just like FANG outperformance, everything else did meh, and the indices just grinded higher. If we go back to that kind of market where Apple's up every day, Microsoft, Amazon, all these names, it really doesn't matter if the breadth turns negative. You can still end up with mega caps that are pretty buoyant, when you're looking at the headline indices. If you look here at our sector map, you can see pretty much red across the board. Only green areas, we had European financials, we had real estate, and we had healthcare. And you can see in our top slots right now, we have medical devices, utilities, and home builders. So we're getting a lot of these different areas of the market that are leading. Like, for instance, utilities. That's a very defensive sector. Consumer staples have done really well. So overall, the market has been grinding higher, but on these more defensive areas. And then you can see at the bottom of our list, we have the blockchain ETF. We all know there was that big mini flash crash over the weekend in cryptocurrencies. We have, the SPAC ETF and then the cannabis ETF. So it's really just sell all those areas of the market, rotate into these more conservative areas. If we look at style factors, you can see, also all red. Best performing style factors, we had Minvol, very defensive part, down 0.3%. We had international value down 0.19%. But really the areas that got hit very hard were momentum and cyclicals and high beta as well. So for me, coming into today's session, I was net short the market. So I didn't really have any feelings of oh my gosh, everything's on fire today or anything like that. I was able to look at the game board, pretty clearly, and add some things selectively. So we'll jump into that right here. So let's see. Yeah, so I added DQ this morning. I did a scan for, okay, what is, bucking the trend and moving higher on high volume? And this DQ, I was seeing in the pre-market a lot of these clean energy names being upgraded. Amazon, did a deal with some clean energy company. So I'm like, oh, okay, there could be a shot in there. I see this company DQ was up on like it was up on like over 2 relative volume. It was like very close to 3, and it was just ripping. And I was like, okay, I'm gonna add DQ. I see there's heavy volume on OpEx, and it's looking good here. DQ, just flopped throughout the day, so I stopped out of it. This one I was like, yeah. I entered this one because it was like breaking out of a downtrend. See, I took a stop on that one. Where are we here? So I stopped out of that one same day. I did get long EXPC. And for Pristine Capital members, you can see I was doing some analysis on this name over the weekend. A lot of times that's what I like to do on the weekends now, because I find in this 2021 market, you have to be like a little bit better, a little bit sharper. You have to understand like market volatility is just going to be a big time feature this year. And there's going to be times to really buy things on dips. So with these SPACs, I've been kind of explaining this on Twitter, where essentially what we have here is indiscriminate selling of an entire like mini asset class, essentially. And granted, there's a lot of garbage in this SPAC space. A lot of these companies are just terrible. They just went public via SPAC just to enrich, the higher ups, etc. But there are really good companies that are actually just going public via SPAC, and those are also being sold with all of these, just terrible companies. So, Experience Investments Corp, they are taking Blade public. Blade is essentially like an Uber, but for helicopters, planes, etc. And Blade, they are actually really trying to integrate themselves with these new eVTOL vehicles, which are pretty much next generation. They are carbon neutral. They don't really make much noise. And yeah, I was doing a deep dive on this one. The projections seemed pretty good. So I ended up purchasing this one at $9.97. This one, it's so cool. So I was watching some CEO interviews this weekend. And yeah, the CEO, he's got a lot of good experience. He worked at TripAdvisor. He was the CFO of Sony. Seems like an interesting guy. And I actually posted about Blade, on Twitter. I was like, sometimes I like to do that. I'll go back and forth with somebody that I think is like really smart and just see maybe they can, highlight something I was missing or whatever. And the CEO saw me tweeting about the company, and he actually DM'd me, and he was like, let me know if you want me to set up, some time with our investor relations or even the CFO. So I was like, oh my gosh, this is crazy. But yeah, I ended up purchasing this one at $9.97. More like a long-term thematic hold. So we'll see what happens. But yeah, ended up closing at 10:02. So yeah, that one is more just like a nice placeholder. I think it could do well in the long term. I got long some FUTU at 168.79. And this one, beautiful breakout here for FUTU. Really nice. I was like, wow. Proud of you, FUTU. Really good. And I entered, I waited for my rules, waited for it to break out. So I entered this name and ended up running throughout the session. And one of our members of Pristine Capital was like, hey, I think I'm going to take some of mine off like 175. And I was like, yeah, I do not blame you for taking a target at all. I was like, I'm going to keep mine on just to, see where this one goes. My target was like around like 185 or 190 for like an initial target. Pretty much as soon as I moved my stop up to break even, this one moved really nicely. As soon as the market closed, it was like, boom, equity offering. And these guys, they're offering, I think it's like 9.5 million shares. So I ended up closing this one out in the after hours. Because I was like, you know what? I'd paid 168.79, closed out for 168.25. Yeah, and it was just like, when I enter a trade, I do actually like this FUTU as like a thematic play. But when I enter, I'm not entering for an equity offering on day one. Typically, the equity offerings, they're dilutive. A lot of times the stock takes a big hit. Sometimes it takes a while for it to come back. So I was like, I'm closing this out in the after hours. And then the other entry that I made, this is one that I really like. So we had this like cryptocurrency like flash crash over the weekend. I actually bought this Ether ETF. Yeah, so I said buying the dip in Ethereum. And yeah, so I bought the ETHE for 22.20. This one. Yeah, I like to buy my crypto on the dips. What I noticed was kind of like interesting was, we got that flash crash. Apparently it was like some whale that sold a bunch of Bitcoin. But then once that happened, it wasn't like, oh my gosh, that was the big one. And then like now we're just flipping into the abyss. I mean, the cryptocurrency market stabilized pretty quickly. So now you can see, this is Ethereum. Ethereum is actually trading a bit higher now than where I bought that ETF. But yeah, with crypto, it's so funny because when it's ripping, everyone is a believer. And it's like, oh my gosh, my conviction is so strong, bro. And then once it dips, everybody questions it. And they kind of like lose faith. And, it's like, oh, I'm not buying it now. Like, who knows where it's going to go. But it's really like buying on the dips has been helpful. So a lot of these trends that are in motion of like, institutions jumping in, this being like the next wave of the internet, I don't think any of those trends changed. I mean, it wasn't like the Coinbase IPO. That was the whole reason we were all invested in cryptocurrency. Now that that's out of the way, now cryptocurrency can just fall into the gutter. I think that was like a nice sell the news event. And it created some volatility, but, I came in and bought some of that Ethereum ETF to buy the dip. And then this blockchain ETF. A lot of the companies in here, I think, are like pretty suspect. But yeah, now this one's trading at the lower end of its recent range too. Yeah, I bought the Ethereum ETF. And then the other trade that I made via options, only other one I did was I got long the Applied Material September 17th 1:30 strike calls. This is one I've been patiently watching Applied Materials, just waiting for a dip here. We ended up getting this dip to the 20-day simple moving average. I entered this one, and like I said, I came into today short the market. So I bought this, and Applied Materials just like immediately started dropping. But I was able to stick with it just because I was like, I have other hedges on and shorts. So if this one, happens to fall into the abyss, that's okay. But yeah, luckily this one sort of caught on that 20-day. And yeah, I think if the market is to head higher, I think Applied Materials will participate. So yeah, we'll have to see what that one does. But yeah, so those were my trades for the day. Didn't do a whole lot. So it ended up on a net basis, I had this Applied Materials, the Ethereum ETF, and Blade. Then if we pull up our options data via Cheddar Flow, you can see a ton of puts came in the morning. They were pretty much all concentrated on Tesla. So this is kind of interesting because I'm looking at Tesla and I'm like, this doesn't look that bearish, honestly. So yeah, we were making, so we like slipped into the abyss, and then it was like we made a high, higher low, pretty much the equivalent high, higher low, higher high, and now this just looks like another higher low. So we'll have to see, maybe we get some follow through tomorrow. But yeah, Tesla, they were all coming in for puts and ended up just putting in a doji. So we will see. Let's see what else we had. Yeah, so we had the Tesla, the Q's puts, some DRI calls. It's a restaurant's name. Let's see what DRI did. Okay, so yeah, this one's still trending nicely, only down 0.25%. That's pretty good. Yeah, and these are for July. Got some silver action, and then into the close, some more puts. This Activision is really catching my eye. And I was actually thinking about putting this one on into the close, and I was like, no, I'm not gonna over the tips of my skis, adding longs here when this could be a little like mini turning point. But yeah, I love this one. This sort of reminds me of like the FUTU setup. So maybe I shouldn't trade it. No, I don't know. But yeah, this one, it had a couple of red days, but the price action is really tightening up. And then we had this call buyer buying some June 100 strike calls, about $1 million worth of them. So yeah, that one's definitely interesting. I'm going to keep watching Activision, see if I can get an entry in this one. With that being said, hope you all had an awesome trading day, and I will see you all in the pre-market session tomorrow.